Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. It's that time of week again where my business partner, Sam Rust, takes over the show and interviews our guests. I hope you enjoy the show.
This is your daily real estate syndication show. I'm your host, Sam Rust. Joining me today is Sohail Hassan with MarketSpace Capital. Sohail is co-founder and managing partner at MarketSpace Capital and is responsible for setting the firm's strategic direction as well as overseeing the day-to-day management. Before joining MarketSpace Capital, Sohail acquired and successfully exited several business ventures related to engineering and technology, as well as serving as the director of U.S. operations for the Apex Group of Companies, a global consortium with a focus on providing services to both the private and public sector in several industries. Sohail, thanks for joining us today. Wonder if you could give us a little bit of background about your past, specifically what led you into commercial real estate.
Absolutely. I can give you some introduction, kind of my background, how I got started. And funny enough, Sam, my experience really out of college was working in politics. I studied poli-sci at Texas A&M University, and my father happened to be friends with a then Senator Barack Obama and became friends with him in 2004. And as a result, brought him to Houston in 2005, and we got to meet him. And this is before everybody, really knew who Obama was, right? So when I graduated from A&M, I had actually been accepted to law school, but I had this opportunity to join the Obama for America campaign. So moved to Chicago, and in November of 2007, I started working out of the Obama for America headquarters there in Chicago, and spent the entire year there helping him get elected for president. And my job at that time really was raising money. And so kind of bringing in contributions specifically from South Asian people that are of South Asian descent, and doing some vetting operations and making sure, of course, we can accept their money. And so following that, I moved to DC. I'd lived there. I got a master's from George Washington University in political management, which is effectively teaching you three things, which is raising money, developing your messaging, and mobilizing people to vote on election day and to obviously for your causes. And so kind of lived there for 4 years and took all of that in. And from there, I always had a passion for renewable energy, specifically solar PV and its application to residential and its ability to, offset energy consumption. And of course, that's a big thing out in Denver. I'm sure you're very familiar with it. And so at the time, I had started a company that was with another friend of mine that basically was a technology company for the solar industry. And we ended up getting support from the Department of Energy. And our whole goal there was to reduce what is known as industry soft cost, which, as you know, when it comes to solar, there's hardware costs like the actual panels and inverters, but everything else in terms of engineering, design, all of that is related to the soft costs. And so again, we had a company that would seek to reduce those. And so I spent 4 years of my life dedicated to this sector. And eventually we had an opportunity to sell the company. And in 2017, we ended up being able to exit out of the company. And from there, that's when I was kind of looking what was next for me, right, Sam? Sure. And specifically, I had a friend of mine that also went to Texas A&M, and he was in the real estate industry and done very well for himself. And understanding that true wealth in this country is generated through real estate. I mean, if you even look just at the Forbes list, right, the wealthiest people, real estate is at the top. So kind of understanding, I wanted to be in that sector. And I also felt that, this real estate really and investing in real estate really kind of gives you the freedom of the lifestyle that you want as well. And so understanding that, I was introduced through that mutual friend to a friend, David Rodarte, and he's another managing partner here. He's been working in real estate his entire career. And then, of course, we were introduced to Dr. Masaki Oishi. And Dr. Oishi has been, working in real estate since the early 90s. He's been investing. And David and Dr. Oishi had essentially started doing investments together since about 2012. And, they started with a multifamily real estate investment here in the Houston area. Since then, it's evolved into retail, shopping centers, office buildings. But I would describe the firm as, very opportunistic in terms of just going after deals that they saw, right? When I joined the firm in 2017, we wanted to really first and foremost, I should preface this conversation by saying that, when Dr. Oishi, myself, and David met for dinner for the very first time, the conversation was driven not really by the idea of investing in real estate, but by the idea of how we can use technology to really disrupt the real estate industry. And of course, by that, I mean, the use of blockchain technology. And so understanding though, at that time, and, after doing some research on this, we didn't want to be a platform that we build in terms of a technology where we ask other people to come onto our platform. We thought the technology in terms of its application to real estate was still kind of in its, it's still
very nascent.
Yeah, it hadn't matured enough, right? And so as a result, we kind of wanted to take the wait and see approach when it came to the technology. But aside from that, our directive was then to build up our assets under management and to basically have it so where one day we have a $500 million portfolio that we can then take through and use and go through the process of tokenization to bring some liquidity to this area, right? And really understanding, Sam, that we truly want to democratize the ownership of real estate. And this fundamentally is how we feel it can be achieved, right? So from there, we really started adding and kind of putting a more disciplined thesis and approach to our real estate investing. And at that time is when we kind of made the decision to focus primarily on multifamily. And so we started kind of jettisoning out of those retail and office assets. We still own one retail shopping center here in the Houston area. We own 2 office buildings, but the other, we still own double of all those different assets. And we started exiting out of those and then focusing specifically on the multifamily side of the business. Now, our bread and butter has been on the value add side, acquiring existing assets and of course, reducing the operating expenses significantly and obviously putting and performing comprehensive renovations to the units and increasing rents, just as you know. But more so, we're doing this with the idea of, keeping kind of 3 things in mind. And these are kind of fundamentally the communities that we try to build as well as we got into the development side of the business. And that is that we create communities that are affordable, they're sustainable, and they're inclusive, right? And so those are kind of our mission statement and our driving force in all properties that we invest in. So with that being said, today we sit with 19 investments, Sam, totaling nearly $400 million of assets under management. We currently are developing about 500 units. One project is here in the Houston area, and another project is in the Dallas area. So that's primarily the 2 markets that we've been operating out of for the last couple of years has been the Houston and Dallas markets.
Okay. Well, really appreciate the sketch, Sohail. Really interesting journey that you've taken. There's a lot of questions that I have based off of that, but maybe we'll start with some things that are more familiar for our audience and then move into the tokenization and blockchain and how that intersects with real estate. I'm curious, you spoke quite a bit about how you guys are moving towards multifamily and value add multifamily, plus some development versus office, retail, any other asset class within commercial real estate. Why that focus? What is it about multifamily that has attracted you and the team at MarketSpace Capital specifically?
Sure. So, there's 2 things that we started seeing. And then again, we made this decision back in 2018, 2019. So, we started seeing just kind of the trends in the market. It's clear that shopping is going towards digital. So the big retail shopping centers that have giant retail, big box retail are obviously not performing so well. Whereas, so even in the shopping centers that we've invested in, we really focus on more service oriented businesses, the barbershops, really medical focused. We have a lot of those, veterinarians, x-ray clinics, those types are the tenants that we have in our shopping centers. But even on the office side, you're seeing, remote working. And obviously all that was even further precipitated through, the pandemic, right? Now people are seeing that they can work remotely and they can use tools and technologies like Zoom, and they no longer need to return to work, right? So all of this, of course, was to say that, we couldn't predict a black swan event like the COVID-19 pandemic. But that's to say that through that, we've been seeing kind of the asset classes that have really remained the most resilient, right? And out of those, I mean, there's only a couple that you see kind of on the industrial side. And on industrial, you have like data centers and cold storage, right? Those have performed exceptionally well. But then aside from that, retail has taken a hit across the country, particularly here in the Houston market. I mean, we see it, right? We feel it from the retail assets that we own. And then obviously, on the office side, I mean, through the entire country, office is struggling, particularly here, Sam. What makes it a unique differentiator for Houston is that we are very dependent on the oil and gas economy. So when oil and gas is not doing well, then we know that, and it's at a lower price, which it's been for the last, couple of years, that the Houston economy is not doing as well. And so therefore the office directly takes a hit from that. So we see in the Houston area, particularly and all throughout Texas, that what has really remained the most resilient throughout all of this, even through the pandemic, has been the multifamily asset class. And so while we didn't predict this event, we feel, this kind of further reinforces our investment philosophy. And that's the whole reason why we further decided to double down, not only on the value add side, but then we started creating a ground up development program and started pursuing those projects as well.
Yeah, I find it pretty interesting. Folks go down a couple of different paths in the syndication space. But I'm starting to see more groups that are exploring ground up development. At LifeBridge Capital, we're doing some ground up development in the Idaho markets. You guys, several other groups that are fairly well known are exploring that. And it seems to be, at least from our perspective, related to some of the relative costs and also just getting more entrenched in the industry, making those connections where, we didn't maybe have the GC experience required, but you can find those people, you learn a market and you realize, hey, we might actually be able to build Class A product at somewhat of a discount on per unit pricing compared to some other product that's trading that's already built. Some of those dynamics are really interesting.
That's exactly right. I mean, you hit the nail on the head, right? Even the returns that you're seeing on these ground up developments, I mean, it's important to have some of those in the pipeline. And as you learn, like we are right now, you're going to make mistakes. And you learn from those mistakes, you move forward and you try to make sure that you do the next project correctly. And eventually you'll get it right and you'll have those in your pipeline. So our goal, at Market Space Capital is to have 2 to 3 development projects in the pipeline every single year while we have an ancillary program that's focused specifically on the value add investments.
Yeah. So I was looking at your website, marketspace.capital, and you guys have some historical figures. You guys have really exploded 2019, 2020. There's been tremendous growth. You came on in 2018. Then in 2019, you went from doing 25 million to 166 million in acquisitions and then to 272 million in 2020. How have you guys scaled out, particularly as a syndication group? You guys are raising money from investors. That's a big jump to in 2 years go from 25 to 272 million. If you were to boil that down to 1 or 2 key steps that you guys took, what would those be?
Great question, Sam. I appreciate that. And obviously we're very proud of our record and we're very blessed to, really be in a market like Texas. And I would say, Sam, it's a perfect confluence of events that took place for us to be in a position where we're in, one of the strongest markets in terms of the state of Texas, but then also within the state of Texas, you have the cities like Dallas and Houston, which are just exploding right now in terms of development. So, I hate to say it, but partially is due to because, we're good sponsors and we maintain integrity in everything that we do and try to be very transparent towards our investors. But it's also because, you could throw a rock right now in the state of Texas and hit a good real estate investment, right? And so part of those things are what has led to our success. But aside from that is, again, taking a very disciplined approach, understanding that this is the market that we wanted to go in. We started developing our marketing from there basically in 2017. And understanding that Dr. Uishi, of course, is a physician and understanding that that's kind of a specific market that we can focus on and educating other medical professionals on the benefits of investing in real estate. We started really focusing specifically on that. And, today we stand with a very robust investment network. And Sam, I always say that this is kind of the natural evolution of a private equity real estate firm, right? Just like Sam, when you started out, it's you and a partner, you guys put your own money up, you take a small deal down, you execute, you understand this is something you can do, you do another deal, you decide to syndicate it, you bring in friends and family, You end up taking that deal down, you perform on that one, then you start doing another deal, and suddenly you become sophisticated enough to where institutional capital starts getting attracted to you. And that's exactly the position that we were in. And, we just signed a agreement with a South American fund. It's a private equity fund that's, one of the largest broker dealers actually in South America. They go by the name of Finsa Upper. And basically, they were looking from Latin America to deploy capital into the United States. And we've signed an agreement with them to deploy $160 million of the $500 million total that they're looking to deploy specifically into real estate investments with market-based capital. So again, we've come to a point where now we can, couple this syndicated capital along with institutional capital and be able to take down larger projects. And that's exactly what we've been able to achieve.
Yeah. Oh, that's fantastic. So at the beginning, as you were kind of going through your background, Sohail, you mentioned that when you came aboard MarketSpace, when you guys founded that, you were looking to the future, towards technology, towards blockchain, and I think you mentioned tokenization. And you talked about this idea of democratizing capital, democratizing the ownership. And that's something that I'm really interested in. I'm really intrigued by. I'm curious for our audience, could you just define a couple of terms? So let's talk a little bit about what you mean when you say democratization, and then maybe just a brief overview of tokenization and how that intersects with this thing we call the blockchain.
Yeah, fantastic, Sam. And, I'm really excited about this topic because, it's really at the center of two things that I happen to be very passionate about, and that's real estate and blockchain. And like other technology enthusiasts out there, I've been following, just like you probably, Sam, following blockchain since the very beginning and really understanding its ability to make such a significant impact to almost every aspect of our lives, right? And I'm sure you obviously are very familiar with Bitcoin and cryptocurrencies, but that's not necessarily the subject of our discussion today, right? Because specifically today, I'd like to focus on blockchain technology. And, for your listeners out there that do not know, blockchain is basically the new rails of the financial system. It entails a network of smart contracts to connect issuances and to those networks that essentially allow for 24/7 trading. And basically it's, when you think of the term blockchain, it's basically a series of information that is cryptographically secured, right? And it acts as a distributed ledger that is immutable, right? So a smart contract, and the analogy that, I think is the easiest to kind of understand, is that it only performs a specific execution if certain terms are met. So a great analogy is the vending machine, right? You put in your money, you make a selection, and it only performs specifically, what that is. So that's like a simple idea of kind of what a smart contract is, right? Now, there's several types of digital assets like cryptocurrencies, for example. And, we mentioned there's obviously Bitcoin, but there's other protocols as well, like Ethereum, that are specifically for issuing those smart contracts. Okay. And those are essentially called utility tokens because they provide a benefit if a task is performed. So there's two of these asset-backed tokens. First is what is known as an NFT, or non-fungible token. And I'm sure, Sam, you've heard of that, right, in the news recently with like digital art that's fetching
CryptoPunks
millions of dollars.
And kind of crazy stuff that's going on. Yeah.
So funny. Yeah. Right. And millions of dollars literally are being bought for this. Okay. Then there's those security tokens. And that's actually, really the main focus and topic of our discussion. And so these security tokens are regulated securities, meaning that the cost of one share is treated the same as the other, which is why it is different from an NFT. Okay. And that's essentially the idea. But Sam, the benefits of this technology are absolutely amazing because it has the potential to address what are known as kind of the two biggest drawbacks that are typically associated with real estate investing. And that is, of course, the lack of access, right? Because the cost of the ticket is high. Typically, at market-based capital, our minimum investment amount is $50,000. And then the second thing is liquidity and the lack of what is liquidity that's typically seen in real estate. Now, this system effectively allows for owners to sell their shares or those units onto a secondary market. And, the implications of that in terms of revolutionizing the industry from allowing, it's something that said like 93% of retail investors don't have the ability to invest in real estate because they can't afford the high ticket cost that's for it. Now imagine that you would have the ability to go onto a secondary platform. So you, Sam, would be able to download a app, for example, like T0. That's the one that the secondary market platform that we work with. It's called T0. And T0 is actually the only SEC and FINRA approved secondary market for real estate. And basically, if they were valued today, they'd be somewhere between Coinbase and Robinhood. That's where they would come in terms of their valuation. And they're about to release a 2.0 version of their app, which is going to help with increased trading volumes and expose people to the fact that they can trade crypto, stocks, and security tokens on one app. Okay. So you would be able to go, Sam, you create an account on T0. And it goes through a simple KYC process. You have to verify that you are actually Sam. And once you've done that, you essentially can go onto this market and you can buy real estate shares. And essentially at very different minimums. You can invest a couple of $100 if you wanted. And you would essentially be able to own pieces of real estate and be able to benefit off that. Now, I'd like to take a moment to talk to you about how, from a sponsor side, what this means. Okay. Now, basically, we go through the process of building a real estate asset. So I'm going to give you an example of a 250 unit multifamily development that we're building in Dallas, Texas. And this is, costing us roughly $188,000 per unit. So total times 250 units, you're looking at a $47 million construction cost. So basically, Sam, if you're saying that, you're looking at a $47 million, that's a base cost of all these investors and essentially what they bought in at. Now, this project was appraised by a third-party appraisal company, and that said that at a stabilized value, this project is going to be worth $66 million. Okay, so with $47 million building cost, we have a stabilized value of $66 million. So we know that that's essentially what the share of the value is going to be once it's completed, correct?
Correct. Yep.
So now the people who are buying in, they're essentially buying, and who invested initially, they're buying in at that $47 million share. Now, once they own those shares with us for a minimum of 12 months, they can then turn around and take those shares and they can list them on a secondary market such as T0. Now, as we go through and complete certain milestones through the construction process, the value of that coin, which was once at the value of $47 million, is now gravitating closer towards the value of $66 million. So the shares have increased on this, okay? Ultimately, we use what is known as a stable coin. Specifically, there's one called Circle that we're using that basically, alleviates all of the inherent volatility that's associated with Bitcoin or Ethereum, right? So now you have a stable coin. So one token, Sam, if you made $100,000 investment with me, I would essentially issue you 100,000 of these tokens. And just like instead of you owning shares on a piece of paper, now you're going to own tokens that's going to be stored in your wallet, right? And after 12 months, Sam, you can take those tokens that's in those wallets and you can essentially put them onto a secondary market and people can start trading at those. But one day, with the idea that knowing that those tokens are attached to the net operating income of the asset, right? So as the asset is making money every year, we are essentially issuing these tokens that are going to and distributing them to the investors. Now, from a sponsor standpoint, and I'll kind of give you the pros and cons. And Sam, this is, we spent in the last several years, as I mentioned, really following this. And I would say over the last year, we've now taken a very serious approach to understanding how this can be implemented into our day-to-day operations and how we essentially go to invest, raise equity for our projects. So in doing that, we kind of came up with, the tangible and intangible ways of looking at the benefits of this, right? And really the tangible things are like very simple, right? That it's similar to an IPO. We're opening up a global market of investors, right, Sam? Because typically before, now once you've gone onto a secondary market, dude from Japan or someone from the UK that's interested in investing in real estate in Texas now can easily just go and essentially make that investment, right? And this market is only growing. So as of like 2019, the market was right around $2 billion. And they're saying by 2025, it's going to get to $5 billion. right? So we're living in this right now. Like this is happening all live as we're doing deals, right? And I fundamentally believe that this is going to be the way that, business is going to be transacted here in the next 10 years, if not sooner. Right. So we're essentially increasing the global market of investors that could potentially invest in these things. Furthermore, you're seeing like a specific digital securities market. I mean, there's a appetite for retail investors that are going through and investing in CrowdStreet. CrowdStreet has something like 75,000 accredited investors on their platform, and they are deploying something like $50 million a month, right, into projects. Now, imagine the ability to have a component of blockchain, right, that allows you to essentially take that investment to the next level. Now, the fact that CrowdStreet and these other crowdfunding platforms are doing so well shows that there is a appetite for retail investors that want to get involved in real estate, right? So then we looked at the intangible assets. How could that impact market-based capital? And so looking at the option of liquidity on a secondary market, we believe that we're offering investors more, the ability to more confidently invest with markets-based capital, because you have the ability after a certain period and you're not stuck within that investment. There is another exit opportunity, which really sets us apart from our competitors who aren't offering that liquidity, right?
I was going to ask, have you guys made it to a 12-month period, issued those tokens onto T0 through a secondary market? And if so, have you seen a liquidity bump in valuation essentially? Because one of the use cases that I've seen for tokenizations that's a benefit for both sponsors and for the original limited partners is by making investing in these projects more liquid, i.e. more accessible, people are willing to pay a little bit more. Essentially, you're lowering the cap rate that people are willing to pay because they can trade in and out of these securities pretty quickly. Is that something that you've seen in your experience?
Yeah. So to answer your first question, Sam, we're going through this process right now of tokenizing our very first asset. And so we do have investors that have already been in the investment for 12 months. Again, it's a ground up development project, right? So you have a 20-month construction timeline.
Sure.
So even within that construction timeline, it's already past that 12-month. So it essentially it alleviates any of the legal compliance issues, and it essentially is approved by the SEC. So after 12 months, you can go onto this market and then have the ability to have liquidity in this. And so we are going through this right now. We just got approved to go through the T0 marketplace. We've gone through and had this discussion with our investors, and we expect that by the end of September or mid-October, we should be in a position to where we can start trading on the T0 platform for these investments. To answer your second question, so we've seen a case study, and I'm sure you may have be familiar with this, which is the St. Regis Hotel in Aspen, Colorado.
Yes,
everybody knows about this. Yeah,
it's like the patient zero.
It really is. And so basically they took 19.2% of their LP equity and they tokenized that, right? And it started sharing at $1.03, right, on the T0 platform. But as it's gone through, today, somewhere it sits at $1.26. So you're seeing, an impact. It did go down during COVID, right? Because they're obviously they had impacts to their operations. So you see in real life how the operations from the real estate side can impact the price of the valuation of the token. And it's so interesting, right? And you started seeing increased trading volume. You started seeing a lot of activity that's happening during that time period. But nevertheless, I mean, they've made it really unique. They've added some interesting aspects. If you invest a certain amount, you get certain things from the hotel. You get a free stay there for the weekend. I mean, they've added some really interesting ways to enhance the investment from the retailer investor side. And as a result, I mean, I think they've been very successful. So again, we're going through the process of taking 52% of our LP shares and basically tokenizing that. The other thing to note is, Sam, this is, as you mentioned earlier, very nascent, right, in terms of the market, and it has not matured. I mean, I'm sure you've seen the graph of like tokenization and blockchain compared to the internet and the advent. And obviously we're ahead of schedule in terms of the adoption of this, but nevertheless, we're trying to ourselves become experts, right? And as we go through this, we're using kind of the best of the best. So we got an attorney who specializes in blockchain law. We are using a company called DigiShares, who is essentially creating a white labeled software component for us. So the way that it looks and feels to our investors, Sam, is going to be the same, but they have no idea that in the background now there's a blockchain engine that's essentially kind of supporting the operations, right? But we wanted to make sure that from a user's perspective, it doesn't change very much and that we're still able to process the investments and go through, the subscription documentation process on our portal. So all of these are kind of play at there. But what's important to note is as we go through this, and again, we become experts. As I mentioned, we brought in like Deloitte for the tax side of this, So we're surrounding ourselves with people who are better than us and who are the best of the best, and understanding that when we've done this properly and we can really understand through the process of secondary trading that everything is working properly. We have a partner of ours that has about $1 billion of assets under management. He's interested in creating some liquidity. And so he'd be interested in taking a part of his portfolio and putting it onto a secondary market platform like T0. So again, we're going through this ourselves with one of our own assets so that we can kind of consider ourselves experts. But if this works like we think it should, we think that, sky is the limit. And basically we can move forward towards liquidating and tokenizing bigger portfolios.
Yeah. I mean, there's so many avenues we could go down this, Sohail. We're not going to be able to cover everything in this episode, but a couple of quick questions for you, more on the LP side. So you mentioned you're doing 52%. Did people volunteer that equity? Was that their choice? Did they know it going in? What did that process look like for your investors? How did you guys roll that out?
Yeah, so we actually developed a communication strategy of exactly the way that we want to talk to them about it. So we actually sent out an email first, letting them know this is something we're considering. We then hosted a webinar.
And that was, just to clarify, that was after they had invested. You guys decided this was going to be the patient zero for us. So you're going to try to message to the investor base that has already committed funds, correct?
That's exactly right.
Okay.
And so we first and foremost hosted a webinar where we invited them on and kind of spoke to them about tokenization and why we believe this is the future, and specifically for this investment. We provided them. We also had on that webinar our attorney, the blockchain attorney I mentioned, as well as an individual from T0, the secondary platform, and basically answered questions for them related to this. From there, now we're going through an audit process with T0, and it's very similar to like an IPO. I mean, they are doing background checks. They're going through due diligence. They're all this documentation, and that process. And this is something really valuable for your listeners out there is like, understanding the cost that are associated with this, right? And again, this is our first time doing it. So we've now spent a pretty considerable amount of money on this just so that we can understand every aspect of this. But we estimate that in the future, we'd be able to probably save costs as we go along. But, with T0 to get listed onto their secondary platform, I mean, that's you're looking at kind of a $50,000 cost. And then you have a $20,000 annual cost per tokenized property, right? So that's pretty much your biggest cost, is to be listed on that secondary platform. And again, this is a lot of these costs are just related to regulations, right? And making sure, as I mentioned, it's pretty much as if you're going through an IPO in the amount of background.
FINRA and SEC compliant, that doesn't just happen. There's a lot of work that goes into that. So who bears those costs? Does the entity so Market Space is bearing those costs?
That's correct. Yeah. So for this first one, because it is a guinea pig of sorts, we're bearing those costs for all of this, for everything that's the partnership is not seeing any of it. But aside from that, I mean, I mentioned DigiShares. So like even having the white label component to be able to power these investments on the blockchain, I mean, you're looking at a $20,000 investment, right? So that's not a lot of money. I mean, and that's a one-time cost. And then after that, there's some ongoing fees, about $2,500 a year annually to be able to maintain those. But I mean, that's a very affordable cost and pretty much in line with what other platforms out there are charging anyways. And then finally, you have the legal side of it. We've estimated $20,000 for legal per deal, right? For them to review the partnership agreement and answer, basically be available to convert this through that tokenization process. Specifically, the attorneys that we're using now, they're very adept. It's a different type of attorney, Sam. You're not going to your normal attorney. And the normal attorneys that we use for our PPMs and things like that, when we went to them with blockchain, they didn't even know what we're talking about, right? So there's a specialized, specific practice of law that is focusing on the blockchain component. And it's becoming more and more, increasingly now prevalent, but it is very important because you're going through smart contracts. And that's where that comes in. As you're developing these smart contracts and you're putting them onto the blockchain, you really need someone who's an attorney that specifically knows how to create these smart contracts. So that's an important part. And then I mentioned to you Deloitte, basically on the tax structuring part, we're looking at, an annual cost of like $10,000 to do that. So basically, just kind of give you an overview, right around $100,000, $120K is what we're looking at. And again, these can be diminished as you move forward and use different tools. Again, our first time around, we just had to go through this process to get credibility and understand that, from every angle, what this entails. So that's about it, man. But, aside from this, you can understand, Sam, I'm very bullish on blockchain. I mean, there are some risk to this. I don't want to paint a rosy picture to your listeners here that, this is kind of the way forward now. What we're going through right now is that there's an unclear regulatory structure currently in place. It's recognized as a security, as you know, but there's potential for SEC. Obviously, they're going to get involved soon enough. We know that regulation is going to happen. So it's going to open it up to more disclosures and require them more frequently, right? Which is obviously fine. I'm actually good with that, right? Because it's taking out the bad actors. And then because most of those disclosures we're currently already filing through T0 and all of these things. I mean, in my opinion, it's good for the industry. And then obviously there's an unclear international tax structure. I gave you the example earlier of the guy from Japan who's investing in the deal. I mean, what does that entail from a tax perspective? The tax system currently has not evolved to be able to compensate for something like this, but they're having those conversations and it's going to get there. And again, there's sponsors like us that are very welcoming to those discussions because we feel for the industry as a whole, it's going to be much better off.
Well, I think that's a great place to put a pin in it. Sohail, really appreciate you speaking in depth about this. I think this is kind of the next wave of innovation in real estate. Real estate, one of the reasons we like it is it doesn't change all that much. It's somewhat predictable. You look over the 200 plus year history of America. If you invested in real estate, that was probably the single best wealth generation tool that consistently delivered better returns than the broader markets. But this is one of those very few points where there's something that I believe, Sohail clearly believes, is going to change this market space. So, market space capital, one of the leaders in this space, definitely be tracking them. Sohail, if people want to reach out to you, learn more about what you guys are doing, learn more about STOs, the tokenization process, and how that might benefit them, where can people find you?
They can visit our website, marketspace.capital. We also have a blog section of our website where we, pretty much document everything that we're going through. So as we're learning and educating ourselves, we kind of write a blog post or a white paper of sorts, and that is, put onto that section of the website. So I would encourage your readers to go there or to reach out to me at sohail@marketspacecapital.com for any questions.
Fantastic. Well, Sohail, thank you for joining us. Thank you to our listeners. I hope you enjoyed today's episode. Have a great rest of your day.
Thank you, Sam. It's a pleasure. You take care.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.